Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, Israel-Hamas is still being eyed. Markets have steadied, but the Middle East tensions remain high. PepsiCo, we're also watching this company after it lifted its targets again. This says demand for Pepsi's products remains strong. And the retail rush begins. Amazon, Walmart and Target dangle discounts early on to get the shopping season going. Now, not long before Wall Street starts trading, this is how equity markets are looking. Just showing you this tick at the moment. What we're seeing at the moment is stabilization. And what I mean by that is equity markets are seemingly coming back, although not in a very sort of confident way, but a more cautious way. And what's also interesting is that markets did end higher yesterday after quite a volatile session, showing you the US Tech 100 as well. That's a daily chart, and also the US 500 as well. But what is even more interesting is actually not that the indices have steadied, but also the volatility. If I show you the volatility index, there you have it. There was a spike there, but as you can see there, this candle here is showing much lower, and we are seeing a clear downward trend. Short term it may be, but a clear downward trend. The 10-year Treasury yields also came off its 16-year peak as trading resumed in the bond market after Columbus Day. And oil prices also easing. Let me just show you those over there. One of our most traded financial assets on the IG platform. As you can see there, we're also seeing this sense of stabilization after crude rallied more than 4% in the previous session. Let's check in on Brent as well. It's been quite a few days, I have to say, given we're still watching very closely the violence in the Middle East. However, many analysts and many economists have started saying that although the violence there is obviously a very serious matter, it's seen as having only a limited fallout for now, and it has nevertheless added a new layer of uncertainty. This is according to Rafi Boyajian, lead investment analyst at forex broker at XM. Now, what's also interesting, other than the volatility index, is that we are seeing quite a number of major air carriers also chart the impact. Here's a look at United Airlines, which is an all-session stock on our IG platform. This is a daily chart, but let's just show you the hourly chart. There you have it. It is coming back up now. Many airlines like United, like American, and also Delta Airlines have suspended flights after the Federal Aviation Administration urged airlines to exercise caution. Delta Airlines said on Monday it would cancel flights to and from Israel until the end of the month. And many European airlines have also cancelled flights. Now, we're waiting on quite a number of remarks from a slew of Fed officials as well to see how the tone is shifting, especially on the interest rate front. They include Atlanta's Raphael Bostic, Neil Kashkari, Minneapolis, San Francisco's Mary Daly, and Board Governor Christopher Waller during the day. Ahead of that, IG's Axel Rudolph takes a closer look at what the technicals are telling us for the Dow.
Well, for today, I thought we might look at the great underperformer with regards to US equity indices, and that is to say the Dow Jones Industrial Average. And you can see here on the daily chart that on Friday, it retested nearly its low from last week at 32,813, which itself was made very close to the low seen back in May of this year. What is interesting from a technical perspective is that we may well have ended an ABC Elliott wave correction. That is to say, here you can see that's the A wave coming down from the July high to the August low. Then you have a B wave taking us up to the mid-September high, and then the C wave down to the current October low. And if that is indeed the case, it would mean that a new impulsive move to the upside could eventually take us back up above the July high, 35,690. So it is looking quite promising at the moment, short term, with regards to the Dow Jones Industrial Average, having risen over the last 2 consecutive days and now approaching the red line here, the 200-day simply moving average at 33,838. And that plus the last reaction high, that is to say a high which was made higher on the daily candlestick than the one to its left and to its right, in this case the late September high at 33,900. That needs to be taken out on a daily chart closing basis. But if that happens, then we, from a technical perspective, have formed a reversal to the upside and could be heading over the next few weeks and months into the year end back up towards this 35,690 high seen back in July of this year. So interesting times ahead for the Dow Jones Industrial Average.
Thanks, Axel. Of course, much of this will change depending on what happens in the Middle East. Investors raising concerns of how tougher sanctions on Iran could affect global supply. Of course, it doesn't have to be said that if the conflict does spread beyond Gaza into the oil-rich nation, this could also have an impact. Just showing you the chart for Brent crude, because in the meantime, whilst we've not had any other developments in the last few hours, Brent is coming down slightly. It was at 87.79. It's now 87.22. Similar picture for WTI as well. And it has to be said that everyone's just kind of keeping calm and carrying on until we get more news of what happens next. WTI was at 86.03. It's now at 84.80 there. Meanwhile, the fighting is continuing. In the night, Israel retaliated with a wave of airstrikes on Gaza. However, as I mentioned earlier, there has not been anything new since that information in the last few hours. And we'll be monitoring that for you throughout the session as we count down to the open. The other thing that is really interesting is on the earnings front. Now, PepsiCo's third quarter profit has beat the street, lifting its annual profit forecast a third time this year. Net sales also rose nearly 7%. Now, much of this is down to the fact that PepsiCo has bravely raised its prices and so far has managed to push it through despite the cost of living crisis, despite many households under pressure given high interest rates. But it's seen that companies like PepsiCo with brands that potentially could give these inflation-wary customers a bit of affordable luxury will continue to do well. PepsiCo, as you know, owns brands like Mirinda and Gatorade, and also they sell everything from Doritos to Cheetos. The Frito-Lay North America unit reported a 7% jump in organic revenue increase, while volumes only fell marginally. And further into the session, we might want to take a look at some of these other stocks to watch. Let me pull up Rivian for you, because Rivian, the EV maker, it's not an all-session stock. However, you can trade this on the IG platform. Rivian Automotive, there's been a report that UBS upgraded the EV maker's stock to buy from neutral. Also checking in on JD.com and many other Chinese firms that are listed in the US, like JD.com and Alibaba. Well, their shares are, if you look at the hourly chart, they seem to be tracking slightly higher. It's fallen back by a bit now. Let's check in on Alibaba for you. Similar picture there. They could move on a report that Beijing is considering new stimulus to meet its annual growth target. Now, checking in on the strike story, which has been really making waves across the United States in the last couple of weeks, not just in the auto sector, but also in the medical sector. This time we're looking at strikes at GM Canada. 4,300 unionized workers went on strike at three GM facilities in Canada from Monday midnight. This is after a deadline to cut a new deal lapsed. Now, this piles more pressure on the automaker, which is currently grappling with strike action in the US. The Unifor National President Lana Payne has said that the company continues to fall short on their pension demands and income supports for retired workers, and meaningful steps to transition temporary workers into permanent full-time jobs. This story is likely to run and run until a deal has been found, and currently it looks like a broad spectrum deal has yet to be cobbled together between the two, and there are already concerns that this could impact the US economy's quarterly GDP numbers when we get them. And finally, the holiday shopping season is almost upon us, and retailers, including Amazon, Walmart, and Target, are already dangling discounts to try and get the shopping feeling started. Many of these companies are starting really early, 6 weeks before Black Friday, in fact, one of the biggest shopping days of the year. But the concern is that with many people buckling under the cost of living crisis that's gone on for about 2 years now, with the strikes going on, and also now with the pictures of the Middle East tensions coming through, there is a concern that perhaps if they don't start early enough, then these retailers won't capture those sales and get those tills ringing early. Now, before we go, let's have a last look at how the market is looking. Here's a look at Wall Street for you. It's ticking slightly higher, cautiously higher. Same story for the US 500 as well, as those Middle East tensions are still eyed, but there is some form of stabilization in the markets at this point. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.